As many of you have probably known and seen that the investment world has been rocked over the last, I'll say 8 to 12 weeks as a result of COVID-19. And you're seeing that not only on the public markets that are going on with everything in the stock market, but you're also seeing it in the private markets. And so I'll give you some perspective of my take on that. So, but before I do that, I'll give you some background. As Mariana said, I run Wunderfund, and Wunderfund is a FINRA registered funding portal. We're one of only a handful across the country that can manage what we call private deals. And we take those private deals or startups and small businesses, and then even real estate, and we take those deals, we put them online for a public offering. And that public offering then gets offered to investors, both accredited as well as non-accredited investors and institutions, so that they can all participate in these private deals as part of the wealth creation process. And so our vision is very much to create a Silicon Prairie, if you will. And that's really to get a groundswell of dollars into the middle parts of America and not just the coasts, because we see that there's a lot of money that's there on both sides. And so in that effort, our goal then is to fuel these moonshots and these dreamers that are out there. And it really brings up the question of, why is public fundraising so important? And we look at it in 3 parts. There's an underserved market in middle America for venture capital dollars. So where the middle part of America is vying for 22% of VC dollars that are available to them. If you're a woman, minority, that is an African American or Latino, less than 12% of that population group gets funded by venture capital. And then if you're a small business in the small business category, and I'm not talking about tech, but I'm talking about small Main Street type of businesses, sometimes we call them lifestyle businesses or private equity type of deals, 81% of those are not using the banks for one reason or another. And so here's really where the opportunity is to take up where those gaps are and fill that in by using the crowd or the public in order to supplement and complement those dollar needs. As a company, we like to vet deals, and so we're always searching for new deals and deal flow partners. And then, like an investment bank or a mini investment bank, what we'll do is we'll price those offerings. We'll have to vet it, make sure it's priced, that the quality of the company is right, and then the value of the company is right. And then we'll brand that offering, which means that we'll simply stand up a landing page for the offering, and then we'll go and find equity investors who should invest in that. This is really the regulations, or these are the regulations that we operate with. They're what we call the public funding regs, provisioned under the Jobs Act, which was released a few years ago. And what the Jobs Act did was it now enabled everyday investors to participate in these deals. So that means non-accredited investors, as well as angel investors. And what you'll find is that this is only going to increase over the next few years. We're seeing this trend already happen. And what we've seen so far, right, in the earliest stages of capital, is that the last year alone, there was about $2.2 billion of early stage capital that went through public fundraising regulations of the 80 some billion dollars of early stage. So, and we're just at the very start of this. And so what's happening now is that the SEC, which is the Securities and Exchange Commission, is loosening up some of the regulations or deregulating some of these age-old types of fundraising exemptions that have been around since the 1930s in many ways. And so what's going to happen now is you're just going to see more and more collaboration between VCs and the public. And there's some major benefits of why companies are, and the trend is moving in this direction. Number one is that it's all virtual. So virtual fundraising in this time of COVID-19, where people are sheltered in place or they're on lockdown, And even with the individual states opening up, you're still seeing people who would still rather stay at home and continue working remotely, as we've already heard some of this today. And what's going to happen now is that you need certain types of technologies and tools and mechanisms, or the digital transformation, if you will, on where we can solicit investors, and that happens through public fundraising or crowdfunding. The second reason is for what we call single SPV for small investors. It's kind of lingo in our industry, but what it means is it allows the smaller investors to coexist with the bigger investors on a cap table. It's similar to, in the analogy I'll use, that is in the public markets. An individual investor can go on to TD Ameritrade or E-Trade or whatnot. They can buy individual stocks using their own portfolio money, or they might hire an institution or a money manager who's buying in huge volume those stocks and so forth, and managing as part of a fund or a hedge fund. It's not that different. Here in the private world, those smaller investors tend to be what venture capital used to say is that it would mess up their cap tables. But now with the SEC provisions, all that is being managed under one single purpose vehicle for those small investors. So it only shows up as one line in a cap table. And the last item here is that from a public fundraising benefit is that transaction handling. So as opposed to dealing with physical checks, which is the way that we typically would manage these types of things, is everything is done online. Believe it or not, people can pay for investments using their credit cards, their debit cards nowadays. They can even do crypto, use crypto as a payment for transacting an investment. So what you're seeing here is really venture capital and private angel investment become more democratized, as I said, but then also digitally transformed. The last major benefit I'll give you is that what a lot of companies are now seeing the benefit of this is what we call testing the waters or advertising their deals. So it's very common for startups to go out and try to find investors on a private level. What happens is that they end up spinning their wheels sometimes, just trying to see if there's some kind of interest in that deal. But before they can even go out there, they have to get a private placement completed, which costs legal. There's getting their financials in order, which might include an accountant, and so on and so forth. With public fundraising, even before you start doing those things, what you can do is stand up a mock page, if you will, which is this is something that's happening later this year. And you can test the waters and qualify the interest of investors before they even have a chance to put money into the deal. And what this is going to do is it's going to make the cost of capital or the cost of fundraising a lot more accessible and cheaper for smaller stage businesses or early stage businesses to raise money. We look at ideal industries. We love tech. Obviously, Main Street businesses we have become even more in love with now, and really supporting Main Street in this crisis. Real estate, we think this is where the industry is going in many ways. Real estate's always been one of these, I'll call it a safer haven. It's not always a safe haven, but people tend to be more comfortable in investing in real estate during crises, simply because there's an asset. It's asset backed, if you will. And what we're also seeing is a huge amount of desire and interest in the healthcare space, as you've already heard prior to this. And that's simply because of what's happening with COVID-19. There's a lot of new companies out there that are really starting to accelerate their efforts. And we're going to see, we anticipate, and we're already seeing a lot of interest in that space where people are starting to raise more capital. I'll give you an example, and it's always good to start with an example of how crowdfunding works and how you might be able to do it. Here's an example of a friend of mine. His name's Brian. He's a founder of a brewing company, which we have a stake in because that's how part of our compensation works. But Brian needed $700,000 in equity to open up his brewery. And he came to my office looking for support because the bank wanted to give him a loan. But as you know, there's a loan to value and debt to equity ratio that banks are willing to do, so long as there's enough equity. And it was a pretty big project, so he came to us looking for some help with this. And what Wunderfund, as we said, is what our goal is to amplify the fundraise, and so that it's more visible to a lot more people. And in order to do that, you have to launch an online offering. And, so we launched this offering for Brian, as roughly about a $890,000 offering, with a goal there so that he could raise the minimum amount that he needed. And there is a process to it. And, we won't go into all the details of all this. So I'm only going to give you a quick primer of it. But basically, it follows what we call an S-curve when it comes to fundraising. And this happens typically when people are raising money. There's a bit of a pre-launch phase where there's a lot of networking that occurs with startups and angel investors. There are events, and there's angel syndicates and venture capital and demo days, etc. And these are really nice things to do when everybody can get together. When pre-COVID, it was easier to do those type of networking events. Nowadays, it's a lot harder, and it's only going to be this way for the next at least 12 months, as we believe. And so a lot of the pre-launch effort really happens virtually, with the engagement in the newsletters, about emails, about the interactions that are happening on social media. All that stuff happens in the pre-launch phase. And that's where it's important for people who are fundraising is to leverage key partners who can also act as promoters on their deals. So those partners or promoters can push deals through their networks. And this is part of the network effect. It's in many ways how this forum has come together, is it helps unlock capital because of the power of the network. You've got a bunch of professionals and investors and startups and other tech enthusiasts here who can then leverage one another in order to get these deals syndicated. So that's the first stage of any good fundraise, is really to get awareness of a particular fundraise. The second is really the launch phase of it, or number 2 here. And that's really about making sure the press understands what's going on. And then there's an engagement process from a PR perspective. And this is where what we know is, and what we've seen works pretty well, is that when companies and startups are able to get some press coverage, what it does is it serves as a validation point for their fundraising. And part of that is just being able to reach those right contacts in the press in your local area, or even on a national level, and then getting the stories out there, because the press they love a good story. And so nurturing that is an important aspect if anybody is looking to raise capital, is nurture those type of relationships. The third is as the curve starts to flatten out, what happens is money starts coming into a campaign at the pre-launch, into the launch phase, and then it starts to flatten out. And at that point, we believe it's really important to continue on with the those PR events, but then making sure that there's constant engagement from the company directly to the followers and or potential investors in a given deal. And so what does that look like? It typically looks like doing more virtual types of campaigns. It means doing advertising. It means taking an ad out on Facebook and Instagram, on Twitter, on LinkedIn, being constantly out there. My background was in marketing at Procter Gamble, and the formula was very simple to get awareness and conversion. It's reach and frequency. So it's reach of a message with the thousands of people that you're trying to reach in a targeted audience, and the frequency of that message that's getting out to them. And the best and most effective way to do that is through social media and using some targeted cookies and those types of tricks, if you will, digital marketing tools that enable that kind of retargeting to happen. The next phase is really the engagement process. And so startups who are fundraising, we tend to host a lot of virtual angel meetings. We've got one tomorrow, in fact. So anybody who's interested, I'm sure I could send some information out to Mariana and get some of you guys if you want to join. where we let companies pitch. And this is really where gives you the opportunity, companies, the opportunity to really close the deal, because people, investors, they want to kick the tires and they want to ask good questions of companies. And so those are always a very effective way to close the deal on these type of things. And the last one is what my kids, I've got 2 teenagers, 16 and 13, they like to say is creating FOMO, or fear of missing out. And that whole FOMO thing is really about, in the last few stages and days of campaign, it's really about hammering that message through, because ultimately nobody likes to lose out on a good deal. Everybody wants to be part of something great. And when they see something that's starting to get a lot of traction, they want to be in it too. So that's where we see a lot of FOMO go into place. And what we found in Brian's campaign, for instance, is that, you start to see a lot of uptick in engagement from investors. And what was really interesting is that what we know in underserved markets and underserved founders especially is that there's a level of economic inclusion that occurs when they're fundraising, where people of color start to invest a lot more than they typically would on a given deal. And so that's where we see the whole power of using public fundraising is it not only activates the majority population of angels and VCs who traditionally invest in deals, but then you also start activating the minority populations as well. So that's about it. I'm happy to chat anymore. And if you have questions about public fundraising, we're Wunderfund, and I'm super happy that, we're able to do this kind of thing, because, this is what's happening. This is the trend in the future, is that in order to fuel these moonshots, it's going to go virtual. So thank you so much.